Hey, Investing Unscripted listeners. If you want to earn 6.9% yield for the next 4 years or more, you need to check out the bond account at public.com. It's a new way to invest in a diversified portfolio of bonds and receive monthly interest payments. The best part, if you act now, you can potentially lock in a 6.9% yield until 2028. In other words, no need to worry about the Fed's upcoming rate cuts. With a bond account at public.com, you can earn a 6.9% yield even as rates fall. It only takes a couple of minutes to get started, but you have to act fast if you want to take advantage of some of the highest bond yields in years. Discover how you can lock in a 6.9% yield until 2028 with the new bond account only at public.com/investing unscripted.
Hi, Jeff.
Hey, buddy.
How are you?
On time?
Happy. That's mean. It's well played. Should be live on YouTube. I think we're live.
Well, we're recording the podcast part of it regardless, so.
Fair enough. Fair enough. Happy Friday. Happy first Friday, Jeff. Happy first Friday.
We're finally doing the first Friday on the first Friday.
Yeah, it's been months since we were actually first Friday on a Friday, right?
Although it may not matter because we forgot to promote this and tell people about it, so we'll see who
Nobody's
shows
here.
up.
Absolutely nobody's here.
It's just me and you talking into the void, buddy.
That's okay. That's okay. Because you know what? It is first Friday, and all we need is you and me.
Yeah, but
We
some
need
audience
nothing
members helps. Well, we should have our normal hecklers at some point because I know two friends of ours who confirmed if we were doing it today, and I think they're ready to harass us. So
All right. So what are we going to start with?
all right. I want to make sure that we're live on YouTube. I don't see it yet, but whatever. I guess we are. You say we are. Not coming up on my YouTube page. But we are recording live for the podcast, so I'm going to continue. So here's how I'd like to start this show, Jason, and it's apt that we just talked about this being First Friday because I think we should sue the NFL.
That's bold.
I think it'll be a successful endeavor for us. So I got like an ad on Twitter today for the NFL game tonight, and they are advertising it as the First Friday game. It says First Friday right in the middle of their ad. And
You know, I get that. I get that too. I think you sent it to me. That's why I got it.
And I think we need to, I mean, there's evidence out there in the world that we came up with this first.
Well, we obviously came up with it first. Evidence or not, we came up with it first.
So are there any if there's any lawyers out there, either watching live or listening to this later, I would like to know if we have grounds to sue the NFL and if this is a smart thing for us to do.
Yeah. So I do know this. I do know this little thing about copyright law is like, you can't copyright something that's not yours. So, but I don't know if you can sue somebody for something that you said was yours, that was yours, but you didn't copyright, but then they also used it.
Yeah, it's ours. I'll
back you up, buddy. That's all
I'm pretty sure Roger Goodell's a listener. So consider this fair warning, Mr. Commissioner.
Roger.
We're coming for you.
Roger, you better be listening because Roger, we're coming for you, buddy.
All right. So that's how I wanted to start. We're going to sue the NFL. We can put that in the episode description. Maybe we'll get some clicks.
There you go. I am absolutely okay with that. I see John Gallegos is here. Says, how we doing? I got my contacts in. So this is, I can't read John's.
I'll read it. I'm much younger than you. As we discussed on the podcast that comes out next week. John says, how we doing this great September Friday? Are you guys looking at your company list and getting ready to hit the buy button?
Ooh, that's actually good. Let's start there because, I mean, we've had some big down. So, but it feels like it should be down a lot, but I don't know that the market's really down as much as it we want it to be.
Yeah. So like something I do every Friday or every Saturday is I I check like how the week went with my stocks. Like I sit down in the morning and with my coffee and kind of go through them. Um, for those of you watching live, Jason has disappeared visually, which is making the podcast much less
I had to
nauseating.
take my contacts out. So I'm back. I'm here, people.
No, but like, and sometimes the reason I like to check it on Saturday is, and I don't pay much attention to how it's doing during the week because it's fun to like compare the actual results from the week with where my brain thinks it is. Because sometimes I'm
I
like,
like
oh
that. I
man,
really like that a lot.
I'm like, oh, this is a bad week. I'm gonna update my stuff here, and then I look and I'm like, oh, the market was up 1% for the week. I had no idea, you know. Or the other way around. I think it was a decent week, and I'm like, oh, it was down. And you know what I get most mixed up is when we have these weeks with like one or two big up or down days because you forget they sort of cancel themselves out sometimes. Um, but I did,
Today was down a lot. It was down almost the S&P was down almost 2%.
yeah, we had a big down day. Was it Tuesday? The first day it was open after the
Yeah.
break, right?
Yeah.
So yeah, I bought some stuff that I can't talk about on yesterday. No, Wednesday or Thursday. I don't know. Yesterday or Thursday or Wednesday, I bought a stock, and it was just one that I had been wanting to add to. It had not necessarily fallen big this week, but it was just the right time to add to that one. But I have to admit, I was tempted to go look at the ones that were down 6, 7, 8% on Tuesday, and I did. And what I discovered was they weren't that different. You know, you forget like, you know, Nvidia goes down 9% and you're like, oh, now it's where it was on checks the notes August 29th. You know, it's like, you know, I saw a headline somewhere. It was like, you know, S&P drops X percent, puts it back to where it was in mid-August.
Right.
And it's like, I don't know, unless it was like mid-August 2019, I'm not sure this is headline worthy.
Right.
Um, but yeah. So
No, that's fair.
I
Well, I will say this. I'm looking and you and I didn't really talk much before this because I played golf today and you're mad at me because I play golf. Um the
I'll keep our petty arguments off the air.
going back, of course I'm gonna share our petty arguments on the air. Um so since going back to the first, and it should be more recent than that from the high, which is less than 6 days ago. But like Zscaler, which reported earnings pretty recently, and the stock's down a ton since earnings. I haven't looked. Zscaler's down 19% since the first, and I should look and see when it actually reported earnings. But like Stoneco's down a ton, SolarEdge, which is in bankruptcy, so I probably shouldn't even mention it out loud. Asana's down, ASML, which we know is down for the China reasons. The China Reasons. Is that a good band name? The China Reasons?
Maybe. Probably not, since you came up with it.
Hey Jeff, if you came up with if you randomly said the China Reasons, would
We
you say
should
that's a
wait.
good?
Let's pull the curtain back a little because I think it would be fun for people to know that I am terrible at naming episodes. I am terrible at coming up with good headlines for articles that I write. I'm terrible even at clever subheads within the article. But and you're good at all those things. Like you're very, very
I'm
good.
quippish. I'm quippish.
Yeah. But man, you are terrible at naming bands. It's like
I don't know that I
it's your
agree with that.
kryptonite.
Yet it is true. So John, to answer your question, how did I shoot? I shoot like somebody that likes to go drinking outside in a golf cart. Yeah. I
Here's
actually stopped keeping score.
here's my problem when I play golf. I if I start to play okay, then I'm like, have a drink. And then it all goes to hell. So I can't help
Yeah.
myself. But back to John's first question, like I kind of am ready to buy, but I'm trying to stick to my plan, right? Like, so I've talked about this in the past, but like what I try to do is I like to buy stocks I have high conviction in that are a lower valuation than what I paid for. And what will sometimes happen is stock will kind of shoot up to the top of my portfolio in terms of price or valuation. And then a down market week, like a week where the S&P is down a couple percent, and all of a sudden it slips just below like kind of the average valuation I paid for it. And I use those opportunities to grab more shares because I feel like I'm still buying a winner. Like I'm not
Yeah,
bottom fishing in my portfolio, but
right.
it cooled off enough that it's come back down to, at least what I had paid previously in terms of price or valuation. And now that might be too high, right? It doesn't prevent me from continually buying something that's too expensive, but it's a way that I try to keep some sort of process. Now, one of the reasons I do that is I remember in 2022 making the two mistakes. One was like there was a day where the market had gone down a bunch. It was early in the year, and I spent a lot of money. Like I even moved a little more into my account than I normally invest, and I was like, "This is what you're supposed to do." Like the stock's down, I'm getting market's down, and then it went down another like I don't know 10% over the next couple months, right? So I I was like, well, maybe I should have kept dollar cost averaging, as the market fell.
Right.
So and then on the other hand too, I've also done the other thing where then I think I learned from that mistake, but I overcorrect and I just keep waiting, you know.
Yeah.
And so I'm just trying to stick to
Right,
my
right. Swinging the pendulum too far, right?
yeah,
That's the thing. So here's the so August 30th, that's actually the most recent S&P 500 peak. August 30th. That's the
yeah,
day. So,
yeah. So I don't know. I part of me regrets like that. What was that really the really big down days we had right around was it August? Like the very beginning of August, we had that like Monday and Tuesday where the market fell like a lot. Oh, it was the carry trade nonsense.
yeah. Yeah.
And then I didn't buy anything. And then I looked back and I was like, oh, that was probably a really good day to do that because I was being patient. I was trying to be patient. So I don't know.
Well,
John, I
and
don't know. I don't know what to do.
yeah, but it's even like it's one of those things where even like those individual days, it's too easy to judge your decision too quickly,
Yeah.
right? Like the CrowdStrike thing. I think there's because I've finally started really looking more closely at like I read the earnings call
Yeah. I want to talk
and
about CrowdStrike. That was on my list of things to talk about.
okay, well we'll talk more about it later. But I guess the point is like I think it's still too early to really judge whether acting quickly or giving it more time it was the right decision. So we'll talk more about that one later. So
Yeah.
I'm not drunk, Jeff. I just want to say, as you're texting me, my nose is a little stopped up. I will say this: my nose is a little
Stopped up
stopped up.
with beer.
With no, no, no.
All right. So
So
here's no, go
I
ahead.
want to do this. I want to do this on first Fridays. I usually do talk about whatever beer that I'm drinking. I'm not drinking a beer right now because I drank all the beers earlier today. I did go golf today. I played 9 holes. For anybody that hasn't, anybody that's in the New England area, I do recommend going out to Treehouse Brewery in Tewksbury. They have a little nine hole course, and they make some wonderful, wonderful beers. So if you like golf, go out there and play their little nine hole course. If you don't and you like beer, just go to their brewery. They have wonderful, wonderful beers. So
Free advertisement.
yeah, because this episode is brought to you by well, the usual advertisers, but I also like Treehouse Brewery.
All right. I want to talk about the macro picture because
Okay. Well, today's a big day.
yeah, and it's been a big week. We got a lot of different little bits of news earlier in the week, but
It's
today's
not a big week.
no. I mean, so there was stuff every day. There were like
I know,
the
but
different
there's always
reports,
stuff every day. They want us to think it was a big week,
and then
Jeff.
but Friday, what today was the jobs report, and here's the pieces. I don't want to talk about like the nitty gritty of it because everyone who follows the markets kind of probably knows the deal. But here's what I
Yeah.
want to talk about because I think this is the more interesting thing. Because you made a comment to me recently, and we kind of laughed about it. We're like the ironic thing with these jobs reports and the way the market reacts is like oftentimes the market will go up when economic data is bad
Yeah.
because
Well,
the market thinks bad data
that's
means
certainly
lower
been the
interest
market's
rates.
vibe since the pandemic is it's kind of doing it wrong.
Yeah. Well, and it got me thinking about like the whole it is a weird there are times in the world of investing. I don't know if you feel this way, and it happens with the interest rate economy conversation because market news or, economy news is bad, so people think interest rates will go down, so stocks go up, right? Like that's the quick.
Right.
But there are these
Right.
times when I find at least my desire to have my stocks go up is in conflict with what I think is good for the world. You know
Yeah.
what I mean?
Yeah. Yeah. Yeah.
So it's
Right.
just this weird disconnect. I don't know if
Well,
anyone
it's
else
certainly
thinks
it's
about that.
heightened right now, right? Because it seems like the popular stock trade, the popular idea is interest rates are going to go down. That's going to be good for stocks because valuations will go up because cost of capital is cheaper, blah, blah, yada, yada, which flies in the face with the reality of the only reason that we're going to see the Fed cut interest rates is because the economy's weak and they're worried about a recession, right?
Yeah.
So for the Fed to get all hot and bothered about cutting rates and stock bros like us to be like, oh yeah, stocks are going to go up. Well, guess what? It's actually a thing that's really, it's not a good thing for stocks. It's because of a recession,
Right.
right?
Yeah. It's just, yeah, I don't know. It just got me thinking about that disconnect.
The
So,
dichotomy. Well, I think that's an extension of a conversation that we've had multiple times that it's not a conversation we could ever have a show about, but that's another topic.
well, yeah, I'll talk about it right now if you want.
Woof.
No, it's just honestly, it's just exactly what I said. It's like I think
Yeah.
there are times when what's good for a company you invest in is not necessarily good for people. Here's the perfect example, and it doesn't have to get political in any way. What did we hear everyone talk about during when interest rates were coming up? It was pricing action. It was price movement, which means I'm taking the higher cost I'm paying as the business and I'm passing it along to my consumer,
Right. Right.
which is
Right.
not great for low income consumers, right? If you're going to the
Yeah.
grocery store or
Well,
Walmart or
it's not
whatever,
good for consumers.
right?
Right.
But if you're let's pick on Walmart because they seem like a fun company to pick on in this instance, right? If you're Walmart and you're paying more for your stuff and you decide I'm going to just make my customers pay more for this stuff. As a Walmart shareholder, you might go, "Great, pricing power. I can keep their profit margins and not get hit by the inflationary, you know, price of things."
Right.
But then
Passing along higher prices.
right. But
Right.
then,
That's
like,
the
for the people
term.
who shop there, that's terrible, right? So that's my thinking in a nutshell. It's just there's
It's
these moments where I start to think like, "Huh," you know?
so it always this conversation reminds me of I'm a big fan of I have some Christmas movies. You have Christmas movies, right? In your family, like you're like
Mhm.
the movies that are like definitive Christmas movies you watch every year.
Like Die Hard.
So like that. Yes, absolutely. Die Hard is a Christmas movie.
Right.
100% agree. Most people don't realize that the definitive Christmas movie of the past 100 years. I say that, and what do you say? Not Die Hard. Go back in time.
I don't remember. I don't listen to most of what you say.
No, Christmas movies. Like you go back, think black and white, like the definitive Christmas movie. What do you think
Oh,
of?
the guy who's the banker, and I can't think of the name of it. It's a Wonderful Life.
Came out in the summer.
Did
It
it? I
was a
didn't know that.
summer release.
Interesting.
Yeah, it was a summer release. So the point is, movies that are about Christmas or take place during Christmas, they're Christmas movies. Whether or not you hate Die Hard doesn't matter. Okay, we just won that. We're done. That's one. It's over. So now that I've won that conversation, the whole thing we were just talking about, it always reminds me because when people have that conversation about the societal impacts of capitalism, right? And it reminds me of the conversation in National Lampoon's Christmas Vacation when Clark Griswold and Eddie are going through Walmart together and they're putting the stuff on the cart and Clark has told Eddie, it's like, look, we're buying your kids Christmas because you're a deadbeat, but we're going to buy your kids Christmas. So they're going through there, and at some point, Eddie just randomly says, "Did your people kill off all those people Did your company kill off all those people in India?" And Clark responds, "No, we missed out on that." And it always just makes me think about
This
the
exact thing.
imbalance of capitalism that we
Yeah.
all experience at some point.
Yeah.
And then I drink some of my eggnog and I move on.
Yeah.
But
Yeah.
yeah,
All right. Anyway, we don't have to go any further down that road. You want to talk about the portfolio contest?
Hey, everybody, we'll be right back, but first, a word from our sponsors.
FinChat.io is the complete stock research platform for fundamental investors. They have all the standard financial data on more than 100,000 stocks globally. But beyond that, they have company specific segment and KPI data on around 1,800 stocks. So, for example, do you want to see NVIDIA's data center revenue growth? They've got it. Do you like to track Apple's iPhone sales? They've got that too. Or how about nights and experiences booked for Airbnb? You guessed it, they've got it. And they just added around 8,000 ETFs and mutual funds to the platform. The breadth of FinChat's data is truly one of a kind. I use FinChat every single day as I'm researching the stocks in my portfolio, specifically when I want to see how they're doing on KPIs that FinChat is famous for. So to get 15% off any paid plan, go to finchat.io/unscripted. That's finchat.io/unscripted to get 15% off any paid plan today. The link will be in the show notes. Hey, Investing Unscripted listeners, this episode is brought to you by our friends at Yellow Brick Investing. Yellow Brick is an aggregator of the best stock pitches across the internet. By tracking thousands of blogs, newsletters, fund letters, podcasts, and more, they're able to collect and summarize the best stock pitches from all over and bring them to you in one single place. Think of it like a modern value investors club. I have to say, this is pretty cool. I can just type in the company I'm interested in and get a bunch of different stock pitches from across the internet. It helps me think through new ideas and find opposing points of view on the stocks I'm interested in. And the best part is, access to Yellowbrick is completely free. Try it for yourself. Simply go to joinyellowbrick.com and search a company or ticker you're interested in. You're bound to find a great report on just about any company. That's joinyellowbrick.com.
Yeah, that's next to talk about. We still haven't actually talked about the big labor data that came out, but it would be a lot more fun to talk about the portfolio contest.
Well, all right, we have the time. So do you have a hot take on, or do you not care about whether we get a 0.25 or a 0.5% interest rate cut?
No, I don't. So those that haven't gone to the future, so you haven't heard the episode that's going to come out next week. When you hear next Wednesday's episode, like I'm really thinking more and more about like the downside protection of having more exposure to bonds. So that I'm telling you that because it means that over the next year, you're going to hear me talk a lot more about bonds, and I'm apologizing in advance for that.
Yeah, me too.
But right now, no, because I think the reality is there's this idea that rates are going to come down, and maybe they're going to come down more, and they're going to come down again, and we're going to go back to this low interest rate environment. We're not.
No, and I'm not.
We're going to go back to just a normal interest rate environment, and we haven't been in one. Like now is actually closer to normal than 2021 was.
Yeah, but I this is the piece that I keep thinking about, right? Everyone keeps talking about the September rate cut, like as if they're going to announce.
Is that a good band name? September rate cut?
It's not bad. It's better than the ones you normally come up with.
Okay,
but
all right.
But it feels like they're going to like announce the rate cut, and then all of a sudden, everything's going to be better. And like I'm actually curious.
No, that's true. Yeah,
I'm super curious to see what the market reaction is like. And maybe it depends more on if it's 25 or 50 basis points, but I keep thinking like nothing will happen because isn't this priced in? Like, isn't this exactly what everybody expects at this point? And then my second thing is, so let's say it's 25 basis points. Okay, they announced that. Great. The next thing everyone's going to talk about is what's the December one going to be?
Yeah.
And then when we get, when we get a December one, it's going to be, well, what's the March cut going to be? And I wonder two things. I wonder when the expectation of more cuts will stop. Maybe it has to be when the Fed says like, that's it. And I'm also wondering like, do we see any difference? Because the reason I'm asking you is back when we were going through the rate hikes, I kept thinking we were going to see more and a bigger impact than we actually did. And it could just be that it just took longer than I was expecting, naive me who's learning all this. But I kind of feel like it's going to be the same thing on the way down. Like I don't know, like is this any kind of lifeline for a business that's needs to go get more debt? I don't know. 8% debt's pretty crappy, but so is 7.5% debt.
Yeah,
like
no, I think that's exactly right. I think that is exactly right. And there's so two thoughts about this. Number one, I to a certain extent, I feel like what we are talking about is based on what financial media is serving. there's just so many people that are more interested now in following this. That it's just based on their ad generated, like their ad revenue models. And they're serving this to people, even though like the serious financial markets know it and it doesn't matter. But the journal like is going to put it and Bloomberg's going to talk about it because like so many people are interested in it and they want to get the volume for the ad clicks. Like, but also I think it's starting to become a nothing burger. Here is the Wall Street Journal markets front page right now. This is what they're leading with on today. That was the day of the big jobs release. Exclusive. JP Morgan plans to report customers who exploited TikTok glitch to authorities. That's their headline.
Yeah.
Right, that's their headline. The headline is not the jobs number. It was the jobs number until lunchtime, and it hasn't been the jobs number since then, which tells me that maybe people are just like, okay, moving on to other stuff.
Yeah. I mean, I think
Which tells me we're definitely having a recession because nobody's talking about it anymore.
right, that's the sign.
Right.
Look, I think most individual investors don't pay any attention to this stuff. You know, I can remember like before I even got into investing and interested in all this stuff, like I would listen to the marketplace show that Kai Ryssdal does on public radio, and it was just sort of like I didn't understand any of it, but I would remember hearing two things. Like he would go through the little like what the market did that day. They'd play the music, the sad music if the market was down. They play happy music if the market was up. And then it was a lot of talks about, you know, they would talk about like big things like interest rates, but it was never like a fear-mongering vibe. It was sort of like an informational vibe. And then as I
Right.
paid more attention to it, you do kind of see all the different sides of it. But I heard people talk about, you know, this is the most consequential jobs report we've gotten in years. And I don't know. We probably have bored our listeners about this too. Maybe we should.
Yeah, it's certainly the most consequential job report we've gotten since the last one that we got.
Most consequential one we got this week.
Yeah. So let's
right.
talk about the contest, and then I do want to circle back to the yield curve.
Oh God. All right. Maybe I can get 40 minutes out of the contest then.
35. That's all you need. 35.
So we don't really do much with the month to month updates other than, you know, use it as an opportunity to just kind of chat through how things are going. But for the second time
to dunk on Jason.
Yes. Well, yes, that's a given at this point. Much like the market expectations of interest rate cuts, it is baked in. For the second time this year, YouTube user Anne Marie Lamb 7748 is the monthly winner. And
Anne Marie, will you take my 2 and 20?
Her portfolio for the month, just for the month of August 1st to 31st, was up 14%, driven largely by new holdings, which was up 30% or 23%. I'm sorry. Interestingly, are you looking at it right now, Jason? Don't look at it.
I am.
Don't look at the bottom. How much do you think the S&P was up in August without looking?
That's a good question because I actually haven't looked at that at all, and I usually do by now. I think it was flattish. Up a little. It was up a little.
2%.
Yeah. Okay. No, that.
I was seeing if I waited long enough, if you would just change your answer drastically.
No, I felt it was strongly convicted, loosely held.
Yeah. So yeah, the S&P was up 2%. Anne Marie was up 14%. 7 of our portfolios actually beat the market in just for the month. And just, you know, because it's what we have to do, your portfolio in the month of August was down 23%.
3%. Yours
By
was
far
up 13.
the biggest.
Yours was up 13, Jeff.
Huh?
Yours was up 13.
No, it wasn't.
It was down. It was down 8%.
Yeah. The only thing saving me from taking a year's worth of grief
was up again.
The only thing saving me from taking a year's worth of grief is how bad your portfolio is, because I'm not doing well either.
Yeah, no, Mitch Fatales is up. I was up another 12%, 12 plus.
And that's with nothing coming from Shockwave Medical, which was acquired.
Right.
Yeah. But
yeah.
so I don't think there's much more we have to say about these month to month updates. They're kind of, you know, just for fodder and fun. I think it would be interesting though, uh, to take a sec because we don't really do this much. I don't think it's something we should spend time on the weekly podcast for. But let's look at the 2023 contest because I did
Oh, I
say,
am, buddy.
yeah, all throughout that year that I'd like to go back and look. Um, so this is from January 1, 2023 through today. You're
I'm no longer winning.
no the audience portfolio is crushing it, up 82%.
Yeah.
Um,
On the backs of Mercado Libre and Taiwan Semi.
Now, but here's what's interesting about your portfolio, I think, and it ties to what we'll come back to later.
Yep.
CrowdStrike was in your portfolio since the beginning of since the beginning of 2023,
Right.
up 134%.
Right. They're still doing exceptionally well.
Right. And for all of the talk about how it's done since the incident in July, if you had bought it a year and a half ago, you'd be
It's the
pretty
second.
damn happy.
It's still the second best performing stock in the entire contest from 2023.
Yep. I'm chugging along here.
Let me say this too, Jeff. If we took team audience, because the year to date, the returns here, that's still just stock price performance. That doesn't include the dividends.
Correct.
The Brookfield Infrastructure's performance is about flat, and I would say with the dividend, it's probably up 7% in total returns.
Yeah. I mean, there's no automated way to include total return on this Google sheet, and I'm not going to update last year's contest.
Right. Because Google's dumb and their formulas for their sheets, they don't just have a total return.
Right. They just have stock price. So this is not 1,000% accurate if you're going to include dividend. But just another interesting thing about last year's, and I actually have more fun talking about last year's because I feel like a year and a half is a lot more meaningful to talk about than 6 months, 7 months.
Yep.
But my portfolio up 43%, and that's with a stock that's down 98%.
Right. Outset Medical, that, let's face it, they're either going to get acquired or they're going to go bankrupt.
Yeah. I'm guessing acquired, but we'll see. Yeah, but even if they get acquired, the premium is going to still probably...
Somebody's going to buy it for $1.
Yeah. And so you're going to get bought out at 98, 93%.
It could be noted comedian and successful investor Mitch Fatel at this point. He could probably buy it.
Yeah. He could sell his portfolio, part of his portfolio, and buy this stock. But I just think that's a good reminder that you're not going to get them all right, but the winners will outweigh the losers over time if you're...
Can we talk about the unportfolio, Jeff?
Why? Because you want to find a reason to make fun of me again?
So the actual best performing stock in the 2023 portfolio contest,
yes,
is one you picked that would be a bad stock, and it's up 316%. Meta Platforms.
Yeah. So I misunderstood the assignment clearly.
1 year and 9 months in, and he says that. I love it.
Well, listen, when it eventually goes to zero in the year 2293.
Eventually, that's pretty funny. So
no, but hold on. I do think this is worth coming back to, and this is not an excuse. I screwed this up. I did this poorly. I misunderstood the assignment. I did it wrong. But go back and listen. I gave actual fundamental reasons why I thought Meta and Tesla would not do well, and I believe at the time everything I said was logical.
I agree. It was just wrong.
It was wrong, which is another good lesson to learn. Sometimes you're right, but you're wrong.
And that's the funny thing about the markets, right? So I do think that's one of my favorite things is as we let these spreadsheets continue to run and compound or lose value, it's just remarkable to me. I do think so. So you had the best performing stock and the worst performing stock in the 2023 portfolio contest. The problem is the worst performing stock was in your picks to be the best stocks.
Yeah.
And the best performing stock was in your picks to be the worst stocks.
But
so
I was not the only one in late 22, early 23 saying Meta's got to get their act together with this Reality Labs cash burning nonsense.
Yeah.
And they did.
No. Reality Labs.
No, not with that part. No. But they were able to get other parts of their business more efficient and cut costs and lay people off, which is never good. But
Here's the reality, right? This is where I indict myself. Because you and I talked about this before, like we planned this weeks and weeks in advance, and we talked about stocks we were considering, all this stuff. And I knew that Meta and Tesla were two stocks that you were considering. Did I really push you back that hard?
No, that's what I
There you
mean.
go.
Like,
There
no,
you
but
go. There's
it
nothing more
sounds
you
like
need to say. I did it. I
yeah,
did it.
it sounds like I'm making an excuse for my poor picks, and I'm not. I'm being very transparent about doing this poorly, but
Yeah.
it's not like I chose them to go down
Yeah.
randomly. I did have at least what I thought was a good reason, and life lesson, life lesson.
Yeah.
Um, Other things I think will be fun to look at. So here's what we have to do. We have to talk about Nick's picks because I don't
Still
think,
beating the market, man.
yeah, I don't think he's listened for a while. Like my stepmother listens every week. She's
So
totally up.
Nick's picks reminded that's stocks that Jeff's dad made Nick, or Jeff's dad made him buy.
Right.
Nick.
But he's behind. I don't think he's listened in a while. So he might not hear this for like 3 or 4 months. But my stepmother will hear it. Will hear it. No, he's killing it. I was shocked when he picked these because I thought by having Nvidia and Old Dominion and Tesla at near highs, I believe, when he picked them, that
Yeah.
there's no way this portfolio would
Yeah.
outperform. And Tesla is down, and so is Old Dominion. But
But
Nvidia is up
he picked
129%.
Nvidia
Yeah.
and also ASML and also Applied Materials. Right? So all of the stuff with AI stocks and semiconductor stocks, like 3 direct beneficiaries.
Yeah. Yeah, his portfolio is up 32% against the S&P 500's 28%. So
That's
Nick's picks,
over 11 months roughly. It
Yeah.
was October 3rd last year.
Right.
Is when that is.
And just
So.
a quick plug for our friend Nick Rossalillo. That's who inspired a lot of these picks. He really enjoyed that first time we had him on without Casey, when he was talking about semiconductors for the first time with us. So that was the challenge I sent to him. You have to pick 5 stocks that you learned about on our show, or picks that were a result of learning on our show, and that's what he did. So, and then the other fun old contest we should just quickly talk about is the Magnificenter 7, where we tried to pick alternatives to the Mag 7. It had to be tangentially related to the one it was replacing, although you cheated. We'll talk about that another time. The real Mag 7, this is since
I did cheat. It's true.
This is since August of 23. The real Mag 7's up 41%. Jason's Mag 7 is down 2%. Mine's up 4%. So we are both losing to the real Mag 7. If you want to earn a 6.9% yield for the next 4 years or more, you need to check out the bond account at public.com. It's a new way to invest in a diversified portfolio of bonds and receive monthly interest payments. The best part? If you act now, you can potentially lock in a 6.9% yield until 2028. The new bond account, only at public.com/investing unscripted.
Hey, Investing Unscripted listeners. My name is Brett, one of the hosts of the Chit Chat Stocks podcast. If you love Investing Unscripted, we think you will love listening to Chit Chat Stocks. On our show, we research individual stocks, interview investing experts, and, well, chit chat about investing every week. From hot stocks such as Nvidia and Celsius to hidden small cap gems, we have something for every type of investor. Follow the Chit Chat Stocks podcast on YouTube, Spotify, or Apple Podcasts and level up your investing skills today.
Yeah.
All right, but here's the question I have for you.
Okay.
Look across the 3 of them. Which pick by either me or you, doesn't matter who, are you most surprised by the result of, and what pick are you least surprised by the result of?
Roku, I'm the least surprised by. We've talked. I've never had deep conviction in that business,
But it's only down 18%.
but it doesn't surprise me. Like it doesn't surprise me at all because I continue to not see the value there. I would like to say that I'm not surprised that SolarEdge is down 88%. But
is that right? Did I miss a stock split, or is that correct?
No, that should be right. Let me just double check it right now.
Let me check it so you can finish what you were saying about it.
Yeah, no, that's right. So, and I will say this: I feel a little bit cheated and tricked because when we talked about it, the alternative to Tesla and EVs and that kind of thing. Like I would have picked ENPH, but you went first and you picked ENPH. So I picked SolarEdge.
Is that why you cheated on Google?
Yeah, sort of. But these two companies, ENPH and SolarEdge, they basically dominate U.S. residential solar and the electronics that go on the solar panels, the inverters and that kind of stuff. And ENPH has done so much better in this downturn. Like they've just done so much better. And SolarEdge has just lost money and lost money. So so that one, I guess it really does kind of surprise me that it's come down. I wouldn't be surprised if you said it was down more than ENPH, but to be down almost 90%. Yeah, it's a little bit surprising. What about you? Let's flip that question back around.
Oh, that's a good question. So
It was
I
your
think
question.
everything that I picked, I feel like I've turned out kind of the way I thought it would.
You're lying because you
No,
didn't expect Roku to be down.
no, I did not have huge conviction in Roku, to be honest with you.
Yeah. No,
I never have.
that's
I'm more
fair.
bullish on it than you are, but I think it's like a long term, like I'm willing to wait and see for a long time. But remember, like when you're trying to pick something that can be an alternative to Google that has to be related to Google, you're sort of limited, right? You went the advertising route because you picked the trade desk,
Yeah.
and I went the streaming content advertising, or I went the advertising route
Well, it's still
too, but I went,
advertising. Yeah.
yeah, but a different
It's
sides of it, right?
connected TV specific kind
Yeah.
of, yeah.
I
Yeah.
think the one, all right, here's how I'll answer the question. In my portfolio, I'm probably most surprised by Pinterest. I expected that to do worse than up 8%. I mean, or 9%. I'm sure that's losing to the market, but
Yeah. Oh, it is.
I think I'm actually kind of surprised at Confluent in your portfolio only because you were so high on it back then. And
Yeah.
as much as I tease you about always being wrong, um, I kind of believed you a little bit and was like, maybe that'll turn out to be a good pick. So
Well,
I'm curious.
here's the problem, pal.
I believed you a little bit. Well, no, I
Yeah.
want to hear I want to hear your thoughts on Confluent because you were really pounding the table for that for a while. And I'm sure you are still confident about the business for the long term, but I'm curious why you think it's struggled over the past almost year
Yeah. So
or
number
year
one, the
plus.
reason why I didn't say that it was the one that I was least surprised in the ones that I picked is because I knew it would be volatile, right? Because it's still a small company. And when we did the Magnificent or 7, like it still wasn't quite at the point of generating positive cash flow and it's still gap losing money. So I knew the stock would still be super volatile. The reason I'm not super surprised down this much is that growth rates have slowed maybe a little quicker than people were expecting. Which when all of those other things about your gap earnings and your profitability and your cash flows aren't where they're still kind of negative, your stock's going to come down. You're not going to get the same multiple premium that you were. So that's why I'm not super surprised. I still have a lot of conviction that they're going to figure it out because they're the creators of this space when it comes to data streaming and like the sea change in the way that companies like handle and process data for analytics and all of the advantages of moving data to the cloud and velocity of data and being able to get more out of it. I still think that they're really, really well positioned and they're the leader in the space. Just maybe things are going to be a little slower to play out than I thought they would be. And the reality that when you have Microsoft and Alphabet and Google that are, that's where your customers are, that's where their data lives, right? It's a product that's serving data that lives in the cloud. Those companies are also going to be pretty big competitors with products doing the same thing that you are. And like, they could lose your entire enterprise value in a few quarters. And it wouldn't move the needle, like in terms of the value of their business. That's massive. Like the competitive threat that represents is maybe bigger than I was acknowledging. But I still think this is going to be a really successful business and it's going to be profitable for investors because as much as the big three and the hyperscalers with the cloud are competitors, every company that has software that they offer to clients that have their software in the cloud faces the same thing. So CrowdStrike and SentinelOne and Zscaler and Okta and I mean Microsoft, they have tons and tons of their every client they have that has data at Google or Amazon, right? They have to face competitive threats from those. So it's the reality of the cloud software ecosystem is that I think we're going to see less like the single company winners, like a la Netflix and streaming. That like there's the one or two companies that just dominate and they make all the money. So I think that dynamic has shifted a little bit for Confluent. And I still have very high conviction and I haven't sold a penny of shares, but I have certainly slowed out my build out of my personal position in it.
Yeah, I'm glad you said that. What you said, or like one of the first things you said was that you still believe in a business, but you knew it'd be volatile, and that's why you're not surprised by it. Because
Yeah.
reminded me that even the longest quote unquote contests that we have talked about in the past 5 or 10 minutes is the one that started 18 months ago, right? Like the beginning of 2023, which is really not long enough, you know.
Right.
And it's kind of fun for me being someone who bought his first individual stock in February of 2020. Like I'm coming up on, I'm like 6 months away or whatever from 5 years. Right. And so it actually I feel like now finally some of those early buys I made are old enough, so to speak, in my portfolio that I can look back and have a little bit of a better sense if I made the right decision. But the story with so many winning stocks over time is, what happens after 5 or 10 or 15 or 20 years. So, hopefully we're still doing this many, many years from now. We can go back and look at the 2023 contest and it'll now be 5 or 6 years down the road, and it'll be even more fun to kind of see how things shook out. Because I think a lot about when I think about NVIDIA, and because I've come close to buying a little more over the past couple months as it sort of has cooled off, and then it fell off a lot more after the last earnings a couple weeks ago. But I think this is what holds me back. I feel like there's a decent chance it goes crazy from here still over the next 10 or 15 years. And I also think there's a chance it falls back to like where it was 3 years ago.
Yeah.
You know what I
Right.
mean? Like, I don't think it's going to go to like where if you bought it in 2015, you're looking in the red, but if the AI stuff cools off quicker than people think, I could see that stock falling back down to 2022 levels, right? So we'll have to see how it goes over time. All right. I kind of want to talk about CrowdStrike. I mean, we only got about 15 minutes left, so I want to go there.
Before we do that, we've got a couple questions that have come in.
Oh, sure.
So I'll start with John Gagas asking about Bank of America. Do you find it interesting that Warren Buffett is liquidating Bank of America when lowering rates should be a benefit to the bank? So I know that Berkshire has sold some Bank of America. I don't know exactly how much. Frankly, I've seen the headlines. I actually haven't bothered to look at this. This is a relatively recent story. And this has happened since the news got out that Berkshire had sold part of its Apple stake. So I think to me, this is a good reminder that when we're thinking about these large money investors with their large portfolios, and I think especially when we think about a Berkshire Hathaway that is regularly acquisitive, that has, I know it broke $1 trillion in market cap pretty recently, but if we back out like all of the equity value, just like the stock portfolio and warrants and other stuff like that, it has $500 billion of operating businesses, right? More than that. So dozens and dozens of companies that do stuff, right? And need money to do stuff. And like I said at the beginning, it's an acquisitive business. And maybe there's some acquisitions on the cusp of happening, and they're thinking about. Go ahead.
No, I was going to say, like, I might have already said this, so if I said it on a podcast, I apologize for people hearing it twice. But this is my hot take on it. I wonder if he's making a little bit of a macro call for a downturn, and not like it's imminent and I want to be protected. I think could be more that at some point we'll have a recession, right? That is a given. It's just a matter
Right.
of when.
Right.
And I wonder if he's thinking to himself, I want to be available to be either the lender of last resort if someone needs it, or able to scoop up a company I've had my eye on. Because I would
Yeah.
imagine he's got a list of companies that, like, I'd buy this if it were this price. And maybe he's
Right.
thinking, if I do, then my cash will be uncomfortably low. So let me just pile on the cash now, and sell things at all-time highs, so that if I do, everyone uses the elephant gun analogy,
Right.
and go hunting, at the end of it, I'll still have more cash than I could possibly ever need to protect my own company. Like, I wonder if it's
Yeah,
sort of
no,
that.
directionally, that's exactly what I was kind of getting at. So I think a couple things. So let's start with this. The market is not at the all-time high. It's at a high. And so the high was the end of September, right? Or the end of August. So
Right, but we're
um
close.
yeah. But again, it's not even on September 30th, that was the high so far, right? But I want to remind people about that. Somebody like Buffett, they're thinking in perpetuity, right? They're not selling because they feel that the market is at the high. So he may take some. I don't think he's ever going to sell. Um, he may trim based on valuations, but I guess what I'm getting to is like thinking about Apple, Bank of America, Amex, Coca-Cola, like all of these like cornerstone holdings that you put them all together and it's 10 companies that make up 70% of Berkshire's portfolio. I'm not interested at all in the trimming around the edges. I don't give a shit that he sold, I don't know, a quarter of the Apple holding, whatever it was. Like I couldn't tell you the percentage. I could care less how much of the percentage of Bank of America he sold. You know why? Because Berkshire still owns tens of billions of dollars of
Yeah.
these companies. So they're trimming, but they still have massive economic exposure. If they sell the whole thing, then I'm paying attention, right? If they buy something new or they substantially add to an existing position, then I'm paying attention because there's probably a signal there. There's some reason to say, hey, if sometime in the past few months they've exited a substantial stake or added to a substantial stake or added a new business, it's like, okay, these are some really smart people that have done well. I should probably at least take a look. But the trimming, I think Bank of America right now is a pretty reasonable price for a pretty solid business.
I
So
think
I'm
the
not
thing
all that interested in a little bit of trimming.
I think the Bank of America one is interesting. And again, forgive me, listeners, if I'm wrong on this, because I honestly have not followed it closely. But what I've noticed tangentially, it seems like every couple days we get a news story that, like, he's trimmed a little more. Like, maybe we're hearing about this not necessarily only through 13Fs, through 4 times a year. So I think that might be why people are a little more interested in the Bank of America one, is that it's been kind of consistent versus like, oh, last quarter this much was sold and then that's it. Um, but here's the other thing
Yeah,
I
13
wonder.
Fs are every month, Jeff.
I thought they were every.
Every month,
Oh, I thought it was every quarter. You had to do it after.
monthly.
Okay. But the other thing I've never gone back and looked at is, like, when have there been other times that Berkshire's gone on a multi-quarter or multi-month kind of selling streak? You know what I mean? Like, is there another time in the past 30, 40 years where he's done something similar? I don't know, maybe there's not, but I'd be curious to know if there
Yeah,
was
you're right.
when.
The 13 Fs are quarterly. I don't know what I was thinking. Sorry.
I thought I was right.
You were 100% right. You're 100% right.
Um,
So yeah, so I mean the latest 13 Fs are from, we haven't even gotten the most recent 13 F. The last one that was dropped is from June. So this is like public comments about the Bank of America stuff.
Mm.
You were saying, sorry, I interrupted you.
no, I was just saying, I wonder if there's been another time where he's sold similarly to how he has over the last couple months. Like, I'm just curious if there was ever another time he did that.
Yeah, of course. The guy's been doing this for 60 years.
Yeah.
Of course.
But like, no, but I guess we don't have to talk about it now because someone can just go Google it. But like, I'm curious what he did in terms of buying and selling in like the 18 months before the last couple recessions. Like, I'm just curious if there's any correlation.
Yeah. Well, I
maybe
mean, there's 13 Fs to go back that far. We could go back and take a look. But I'll say this. So back in the June the June drop, the 13F, sold 20% of Capital One, right? So, but Berkshire has made and exited and trimmed and added to large bank positions a lot over the past,
It feels like
10 or 15 years.
banks, oil stocks, and airlines, he seems to be in and out of a little more quickly than some other things.
Yeah, well, airlines not as much as you think. Like that was just like the
For one
pre
time
and then
thing,
like into the pandemic, it got a lot of attention. But banks consistently, like regularly investing in activity around banks. So John, it's interesting philosophically and like as somebody that follows the markets. But the only time like that I really look closely at Berkshire's actions around like any company is when it's like a big move, like a big exit or adding to or opening a new position. But your point about lowering interest rates should be a benefit for banks. Generally, I think that's positive. If it stimulates economic activity, yeah, more borrowing. I think you're absolutely right. Teo, I want to go back to we got a couple minutes here, Jeff. Teo is right. He's of the non-pros, of the non-people that have come on our show as guests. Teo's winning the 2024 contest.
Yeah, he picked some good stocks. Just real quick while we're talking about this, if anyone's listening for the first time or doesn't know this, on the show notes of every single one of our episodes, there's a link to last year's and this year's contests. In the link for last year's contest, you could also see the Magnificent 7 and Nick's picks. So those two links will get you to all of our current and previous contests.
Yeah, so Teo and Lance is up about 17%. Teo's almost 22%. And this is the year to date. So we normally just talk about the monthly results when we do the updates. Year to date, famed comedian and noted investor Mitch Fatel up 50.7%.
Yeah, crushing it.
Yeah.
All right, we are going to talk about CrowdStrike now because we have about 3 minutes left. So you said earlier that you listened to or read the transcript of the earnings call, which is interesting that you actually did some work on a stock. I listened to it, and I wrote about this last week, so I'm not going to rehash everything I said, but
sign up for our newsletter if you don't get our newsletter, people.
Yeah. I wanted to listen to this one specifically because I want this one felt to me like the kind of one you want to hear the tone on.
Yeah. Yeah.
And I don't know, I'm a little bit of a contrarian in how other people took it. I didn't think that George Kurtz was as contrite as I thought he might have or could have been. There was a very, very brief apology, and then there was like 6 minutes of him telling us how awesome their pipeline is and what a great job they did fixing the problem.
Yeah.
Which I get to some extent. I mean, if he stood there and said like, we really screwed this up, the stock probably would have dropped more. So like, I kind of get it. But here's where I think the conventional wisdom is correct that like, so far the damage doesn't seem to be as bad as maybe people thought it could have been. They did say over and over again that they didn't have very many, I think is the exact quote, deals fall out of their pipeline. But I noticed I think it was Zscaler basically said they did get an order uptick during that time. Fortinet took a veiled shot at them in their earnings call, but they didn't say anything specifically about gaining customers.
SentinelOne took a shot at them.
Yeah. So I think the gist of what I wrote about and what I think about it right now is like, I feel better. And like to the point where like I could see myself buying more at some point, like that I'm no longer a little bit more just to sort of hedge that if I am right that things are better than we think. But man, I could see this going sideways if what he said on that call was mostly spin.
Yeah. Yeah. So my take from reading the transcript, going through the results, reading their commentary in their filings and their press release, and reading SentinelOne's conference call, reading SentinelOne's shareholder. So SentinelOne is a direct competitor. Like they make a competing product. It's like a head-to-head competing product. Reading their results, SentinelOne raised their guidance, right? They raised their guidance. CrowdStrike's guidance cut was about $100 million at the midpoint. they specifically called out about $60 million in annual recurring revenue that they're going to lose because of price cuts, basically things they've done for clients because of the outage.
And extending the timeline on deals that they say will close later.
It's separate, two separate things. There's two $60 million amounts. There's a $60 million amount that they said directly is going to come out of ARR. There's a separate $60 million amount that they said these are deals that we had line of sight of post July 19th that didn't close, that we still think we have line of sight of. They're basically saying that they're going to lose more deals. That's really what it says. That guidance cut says we're going to lose more deals. What we don't know is the Delta deal. Like, we don't know how much business they were doing with Delta, how much of that, if any, they're going to lose, right? We don't even know if Delta is going to fire them. Like, we don't know. We do know that CrowdStrike says, hey, we do more business with some of your competitors than we do with you. So we don't know how meaningful Delta is as a client. So you put all those things together, and I feel like he'd already done the apology tour. I don't think he needed to do that again on the earnings call. I think they said the right things, but it circles back around to we don't know. We still don't know, and we're not going to know until the end of this quarter and probably the quarter after how much this has upended their growth trajectory.
I agree. And here's the last thing, and then we should wrap. I thought it was interesting. If I understood what he was saying, what they were all saying on that call correctly, it sounded like they basically said, we have to cut deals to keep and get new customers because basically everyone else has the leverage right now.
Right.
But in the long run, this is going to help us because by enticing people in with lower prices, they're going to see how awesome we are. We're never going to screw up again. And then we have them for life. And I thought that was an interesting, really sort of optimistic way to look at it. But you could see a world in which that's the case. Like, let's say I'm a company that was considering CrowdStrike. The outage happens. I reach out and say, hey, I was, or maybe I was already in talks with them. I was in the pipeline. And now I say, hey, listen, I'm out of here unless you drop this price 30%. Maybe I was going to leave anyway. Maybe I was never going to sign with them. But now I have a leverage point. I get the product for cheaper, but then it turns out I love it and I stay for 30 years. You know what I mean? Like, there's a world in which that's true. For someone whose job it is to spin, we could all be being spun right now.
Right. That's exactly right. So I don't remember the exact date, but do you remember the big Cloudflare outage?
Mm-hmm.
Like, it affected a massive amount of the internet.
Yeah.
That business has continued to do super well. Right.
Yeah. I told you, my friend who works for a competitor, first thing he said to me after the outage was, they are by far the leader.
Yeah.
And he didn't think that was going to change. So
yeah,
we'll see.
So let me leave you with this before we wrap, because we're a couple minutes over already, like you said. I'm thinking about adding to my position because I think the stock is more appropriately priced based on the risk and the upside. Yeah. You're going to sell all yours on Monday now?
That's it, everyone. Kiss of death.
There you go. There you go. Jeff, this was a good time. It was always fun.
Always.
Yeah. Thanks to all of our viewers for checking in. Teo, doing a good job. John, Ken, the rest of yous, we appreciate you very much. AJ, thank you for signing in and watching with us live. For everybody that wasn't live, Journal of Stitchery, you're here. Thank you for being here. The rest of you weren't here. Be here next month. Remember, the first Friday of every month, except Jeff.
When it's not.
For the months that it's not. That's right. Exactly.
But as of right now, October will be on the first Friday of the month.
You heard it right here. Subject to change.
Until it's not.
Until it's not. Okay, friends, as always, we love giving our answers to these hard questions, answering your questions with our answers. Our answers are our answers. It is up to you to find your answers to these hard investing questions. Friends, you can do it. I believe in you. All right, until next time, we will see you right here. Jeff, I'll see you next time, pal.
See you, buddy. Bye, everyone.